How's it going, everyone? Welcome back to another XRP update. I'm going to explain exactly how holding above the psychological level of $2 will actually bring a new all-time high for XRP holders. So let me quickly freshen this chart up. Let's start with the moving averages. This entire year, the 200 EMA was holding. There was some moments where it went slightly underneath, and when it was recovered, a new high formed. So technically speaking, with hindsight, you can say it was undervalued in those moments. We are, of course, hoping, well, I'm personally not a holder of XRP, but I'm just speaking as if, I know that you guys want it to go up. So I'm speaking as if I also want it to go up for you guys. So we're all hoping this was a bullish deviation, a fake out where it's just trapped leverage traders. It's an undervalued area because once it's recovered, we put in a new high. So for XRP holders, they want that assumption as well that a new high will be put in. But of course, there's a lot more to it than just looking to the left and seeing that it worked out last time. We need to mark out some key levels they need to hold. As long as they hold, then there is that opportunity to recover and put in that new high. So $2 is a major key level going off this low where we saw the last deviation to the all-time high, the new all-time high. We can see $2 is marked out over here. And if we create a box between the 786, 886 and drag it to the left, we see validity with this level of support. So I didn't even need to actually try and work out where the supports are. Fibonacci does it for me in seconds. So I can now get rid of that. I know going forward that above the $2 psychological level, actually XRP is bullish because it's holding major key levels of support. There have been a few deviations. In fact, that's what happened on the liquidation event. There was a deviation of this support. It caught a lower level. If we look at the Fibonacci's, maybe it was a key Fibonacci level, and we can see exactly. So the Fibonacci's just show you all the major key levels of support and resistance without needing to work it out yourself. You just need to be able to place the Fibonacci. If you want to learn that strategy, use the links down below. I've got 30% discount while it still lasts on the education. So essentially, we can also use this tool the opposite way around to gain targets. And so whether you want to mark out this wick or the current low, it's completely up to you because this wick is not as deep on all charts. So if we were to take it from there, $3.26 remains the key level that must be broken. And then by breaking that, you're going to see an impulse into this target area of $4.7 to $6.6. So my belief is that a new all-time high will occur so long as $2 holds and an eventual recovery of the 200 EMA, just to reaffirm that it was a deviation, and like the last examples, a new high followed. So that would be our expectation, and the targets beyond the new high would be $4.70, $5.50, and $6.60. Like, subscribe, comment, and share. And if you want to get educated, remember the links are down below in the description for 30% discount.